Holy smokers, this ain't no dang jokers. Wow, folks, we are in for an interesting ride now at this point in time. Oh my gosh, it's that stage of the roller coaster where you're like, where's this baby headed now, okay? A lot to discuss in today's video, folks. I prepared quite a bit for you guys here today. We're going to talk about a lot of different stocks. In regards to today's video, we're going to talk about some interesting dynamics in the market, talk about some opportunities in the market, what to kind of expect moving forward here. Yeah, busy video for being a Friday video. It's a busy video, so I appreciate everybody joining me as always. Thanks for being subscribed, folks. And I hope you're making some dang money out there. That's all I have to say, okay? Tesla Maesla, a new 2023 high hit today in regards to good old Tesla Maesla stock. This baby continues to run. It is racing between this and Meta on who's going to be the first to $300 this year. It looks like Meta's going to probably get them, but Tesla's giving them a run for the money. It's a close call, okay? Speaking about Meta, new 2023 high in regards to good old Meta here today. Another $10,000 plus upward move for our Meta shares in today's trading session. I mean, just absolute momentum. It just continues into these stocks. And, the interesting thing is, in regards to Meta specifically, right? I feel like the Tesla's earnings over the next few quarters are still kind of a wild card. Meta's in the bag in terms of just skyrocketing net income and EPS over this next several quarters. And so it should be interesting to see how big of a move Meta has or doesn't have in the back half of this year. Because what I believe is going to transpire here in regards to Meta is I believe that we're going to see their net income and EPS skyrocket and far exceed what analysts are expecting out there. Now, I believe some of that's been priced in, at least, right? I mean, the stock's had a pretty epic move. And so the big question that remains to be seen is if Meta comes in over the next 2-3 quarters, really strong numbers, if they give any guidance, that's really strong as well. What does that mean for Meta stock price? Is that what carries the stock to over 300 or 350? To be honest, over 300, that's like right around the corner. I mean, literally the NASDAQ could go up 1 or 2 more days and Meta would be over 300. So the real question is, does this carry Meta to 350 or 400, right? Or has it all been priced in it now at this point in time? I believe it still has a ways to run this year. And the reason I kind of feel like that in regards to Meta specifically is the stock got so disgustingly undervalued last year. And you look at the forward P right now is in the 20s for the stock. And I believe analyst numbers are exceptionally too low for next year. And so this should be an interesting kind of dynamic to kind of watch how it plays out in regards to good old Meta. But fun times, okay? Amazon just hit a new 2023 high as well. This is a stock I do not want to run because the difference for me between Amazon, Meta, and Tesla is Meta, I'm comfortable with what I have for shares. I don't need to buy more Meta shares. I have over $500,000. I don't need more, right? Tesla, I feel comfortable. I have over $400,000 worth of shares in Tesla. I feel comfortable. Amazon, I want more shares in Amazon. I really wanted to get this position to over $200,000 before it started to run. And here we are now at this point in time in regards to Amazon where it's starting to run. It's hitting a new 2023 high, right? And all-time highs for the stock, if I recall, are around $150 a share. We're $20 away from now at this point in time. And Amazon, the thing I fear with Amazon, to be honest, is I believe very similar to Meta is you're going to see their earnings per share and their net income skyrocket to the moon, literally over this next few quarters. And so that's going to, ultimately probably add some more fuel behind Amazon stock here. So this is one I'm just like, can you go down, please, Amazon? But it just keeps roaring higher and higher, okay? Elf Beauty, another one of those stocks that's at a new all-time high. They just continue to execute as well as any public company in the world out there. And, when you put up the numbers that Elf's been putting up, which is among the most impressive you're going to find of any stock in the stock market, you continue to climb and you're rewarded for that. And so there's a lot of stocks in the stock market that are near 52-week lows, that are near all-time lows, that just aren't doing well. But meanwhile, you've got other segments of the market that are just doing absolutely tremendous. Big tech's doing tremendous, and then you get these random stocks like an Elf Beauty that is just performing amazing right now, right? Now, Gene Munster. Flip and Flapjack and Munster. Man, did he do a job on CNBC today, okay? So, Gene Munster, first off, he's been a pretty well-respected Apple analyst for a long, long time. He covers a few different stocks, but Apple's always kind of been the big one, right? And Gene Munster, I always felt like he was pretty level-headed, and I always thought he had pretty good takes. And I don't know what's going on with Gene Munster, but this man's become just a straight pumper now at this point in time, okay? It was funny because I even was speaking to a friend about this because he got to see the segment as well, and my friend is a very big Apple shareholder, right? Gene Munster went on there today on CNBC and now is talking about Apple's got a clear path to $4 trillion. Clear path, right? And they pressed him on it. They pressed him on valuation. He had nothing to say about that other than like, well, other companies, this is how lost Gene Munster is. He's like, well, other consumer staples trade at, PEs in the 20s, so why shouldn't Apple trade at a PE in the 30s since they outgrow them? Gene Munster, in all due respect, sir, Apple is a business in decline, factually, not in opinion, factually, Apple is a business in decline based upon factual evidence, as in Apple's earnings. They're a business in decline. And so to sit there and say, they deserve a much bigger multiple, which was his, holy smokes, man, my hair's a little crazy. Much bigger multiple is what he was saying. How can you say that? How can you say that when there's a business in decline? And this goes to show you just kind of like, this is the type of stuff that scares me a little bit in the market. Because now we're starting to get into these sorts of things. And my friend brought out a good point. He's like, where were these analysts, where were these guys last year, to saying load the boat on these stocks? Because these same individuals, many of them, were not the ones that were out there banging their hands on the table saying, you better be buying right now. Like, this is a tremendous opportunity. For Apple, it's only gotten worse over the past 9 months. And yet Apple hit a low about 9 months ago. And so you should have been banging your hand on the table saying Apple, Apple, Apple back then. And now all of a sudden it's now $3 trillion plus, and now you're talking about $4 trillion when the fundamentals of Apple have only gotten actually worse over the past 9 months. So that's the kind of thing that I'm a little scared of that we're starting to see in this market is things like that, right? And you look at a stock like Apple, right? Apple trades at a 32, 33 PE ratio on this, right? And we're talking about a business in decline for 2023. Analyst numbers all have EPS, revenue going down. You look at their last quarter, down. So we're talking about a business in decline. Now you might say, well, Jeremy, how can you speak about valuation when you own Tesla? It's such a huge position for you. And, Tesla trades at about 2.5 times the PE ratio of Apple. So who are you to speak on valuation? Well, that's where it pays to be a little more experienced in the market and be able to view things a little bit differently. Tesla is expected to grow revenues 22% this year. 22%. Okay? Apple's revenues are expected to go down this year. So we have one business that is in epic growth mode, that is Tesla, and we have one business that is in decline. So, does one business not deserve to trade at least 2 to 3 times the multiple of the other company? I think so. The truth is, Tesla's going to probably outgrow Apple if we're just looking at the next 5 years. I would say Tesla will outgrow Apple by a minimum of 5x. Minimum of 5x, but I think it's a potential of 10x. If Apple had 1% revenue growth right now, you can say Tesla's growing 22 times as fast as Apple. But we can't even say that because Apple's revenue is literally negative right now. So we're in an interesting dynamic where you have a company like Tesla that looks expensive next to Apple, but when you dig a little deeper, you realize, oh my gosh, this company is going to at least 5x, if not 10x plus, outgrow Apple over the next 5 years. So it should command a far superior multiple. Far superior. If you're going to grow 5x, your competitor or whoever, you should be able to command 5x the multiple, right? It just makes logical sense. And so that's where you get into interesting times in this market, right? Now, Yardini, I haven't shown you Yardini charts in a while here, and I thought this was a perfect day to kind of pull this up for you guys. Here we are. Large caps still trading rich, but they've been trading rich for a while now at this point in time. Mid caps, in terms of S&P 400 mid caps, still trading undervalued. Small caps still trading exceptionally undervalued. Right, we're up a bit from the lows that we reached back at the end of 2022, but still very, very low in terms of valuation compared to past time periods. Which means the real opportunities of this market remain in mid caps and small caps going forward, right? And it doesn't mean other stock prices can't perform amazing in the short term, right? You can have some wildish moves, like obviously Apple has been kind of a wildish move. because you got a company that's fundamentals are getting worse while the stock price just continues to boom. Whereas you got companies like Meta that deserve to have their stock price go up because their fundamentals are getting far superior. Their earnings per share is going to take off like a rocket ship. The revenue growth is about to reaccelerate in a massive way. So you have certain stocks that deserve to be going up. You have other stocks that honestly just don't deserve to be going up and are going up exceedingly fast. And so the real opportunities can remain in this market, mid caps and small caps. How long that remains to be seen, right? And you look at something like this, right? This was very interesting. Small cap stocks are trading at their biggest discount to large caps in over 20 years. The only larger valuation gap over the past 50 years was during the dot-com bust. Think about that for a moment, folks. Now, the interesting thing about this is, at some point, this is going to break, obviously, right? These trends can only stay alive for so long, and then they break. The interesting thing is, if you look back at past times, there's usually an epic 2 to 3 year move in relation to large and smalls kind of getting back in, let's call it in where they should be. And you look at this is around 2000, 2001 here. Look at the move between about 2000, 2001 and 2003. I mean, my gosh, just an epic move there. Now, there's two ways you can get there. One is all these large cap stocks coming down in valuation, right? The Apples and Microsofts and all those guys. The other is just small caps really go on a tear, while it's called a lot of the big techs, a lot of the large caps just kind of like do okay, right? And so that's really going to come down to how the economy does. If we do ever enter a big recession, whether that is at the end of this year or next year or something like that, then it will be more of like, I think, the large caps coming down in valuation substantially, and let's call it the smalls just kind of hanging in there. If we don't have some sort of epic recession, then what I believe is going to ultimately pull out, basically happen over the next few years is the smalls would run like crazy, and the large would kind of, let's just call it lag the market a bit. And you would see the actual outperformance in the smalls. So, yeah, interesting time period in the market, certainly. But we know where the opportunities are. It's just the problem is, to predict exactly when this is going to move is impossible. You can't predict if it's going to move tomorrow or next month or 6 months from now or a year from now or 2 years from now or 3 years from now. At some point, this is unsustainable. That's all we do know. And so at some point, this market breaks. At some point, smalls are going to catch up to where they should be, which is this red line. When that happens, it remains to be seen, folks, okay? But it will happen. That's something we do know. It will happen. When these trends in the market, they go for a bit, and then they break, okay? Now, SoFi had some pretty interesting stuff in regards to them today. And I know this is way wider reaching than SoFi, right? But the Supreme Court strikes down Biden's student loan forgiveness plan. Now, this is very intriguing, right? Because this is something that ultimately could affect the economy negatively, because obviously if you're just going to pay off a bunch of people's student loans, I mean, that's going to boost the economy at the end of the day, right? It's and some people say that's buying votes. You can say whatever you want. It might be. That's fair. But at the end of the day, like if you tell people you're going to lower their taxes, if you tell people you're going to pay off loans, we could make arguments that it's kind of buying votes, right? But at the end of the day, you do something like this, it's a boom for the economy, and something like this doesn't go through, it holds back the economy, right? I mean, imagine if the government just said, you know what, no one has to pay their mortgages anymore. I think it's wrong that you guys have to pay mortgages. You don't have to pay it anymore. So we're going to pay it for you. I mean, can you imagine the boom that the economy would go on? Shoot, if I didn't have to pay my mortgage and you guys didn't have to pay your mortgage, wouldn't that be beautiful? And they're like, you know what? We don't think it's fair that you have to pay your rent. We'll pay your rent for you. I mean, gosh, imagine if you don't have to all of a sudden pay your rent. And you know what, that car bill, everybody deserves to have a car. So you know what, we're going to cover that car payment for you as well. Well, gosh, we all have a lot more money to spend out there in the economy, right? And so I do think it matters in a few different ways. Now, in regards to SoFi in this situation, right, there's a lot of people that thought this might happen, and so SoFi was going to be a huge play. So what happened with SoFi stock here today? Well, the stock actually went down about 3-4% here today, right? And at the end of the day, a situation like this, it's the famous saying in the stock market, buy the rumor, sell the news. Because a lot of people got excited about SoFi going into this and thought, the stock would boom today because the Supreme Court's going to strike this down and, it's going to be a huge boom. And I saw a lot of people making predictions that SoFi was going to be up anywhere between 8% and 15% today. And for the stock to finish obviously pretty negative, it just kind of shows you like the thought process. And, a lot of times people try to outsmart the market. And if you're playing these things from a short-term perspective, it's just usually not worth it. If you want to be on SoFi for the next 3, 5, 7, 10 years, fair play. But the problem is a lot of these people play things like call options and, short-term call options and thinking they're going to be right in this situation, and then it turns out to be, what happened actually happened, but it didn't move the stock. That's something I had to learn the hard way back in like 2015. I was doing a lot of earnings trades and things like that, a lot of swing trades, and I'd be right about the situation, let's say a situation like this, and, I would play, let's say something on margin, I'm putting $100,000 in the stock, and then the stock would go down, and I'm like, what the hell, man? I was right about the thing, but then the stock didn't move the way. It's more complicated than that, man. So yeah, many times you try to outsmart the market in these short-term things. It's a lot harder than it looks. Let's just call it that, okay? Now, this is something that worries me out there. I saw this on CNBC, okay? Is this a bull market or bear market rally? 63% of individuals said bull market. 36% of people said a bear market rally. So obviously we've gone more bullish now. I can tell you if you did this survey 4 months ago, 6 months ago, the results were massively different. It would have been overwhelming bear market rally. And they did polls like this back 4 months ago, 3 months ago, 6 months ago. And every time you get the market to go up a bit, everybody's like bear market rally, bear market rally, bear market rally. Oh my gosh, the bear market rally. It's nothing more. And now all of a sudden people are saying, oh, we're back in a bull market. That gives me a little cause for concern here. And you look at the AI investor sentiment numbers, they line up perfectly with this, right? I mean, we've hit 4 straight weeks now at this point in time with over 40% of investors being bullish on the stock market for the next 6 months. And we've hit 4 straight weeks now at this point in time where, let's call it less than 30% of investors are bearish on the stock market in the next 6 months. This is the type of crap that scares me, okay? Because we're starting to get into very, very bullish activity again. We're starting to get into, folks like Gene Munster saying there's a clear path to Apple going to $4 trillion, right? You're starting to get so many of these folks, whether on the retail side or on the, kind of institutional side, to start going bullish. Oh, man, that is something that concerns me, right? And why can't people just play it even? At the end of the day, you see deals out there in the market, take advantage of those deals. But a lot of people just feel like they got to be such sheep. People like myself, we're taking advantage of the extraordinary deals we got last year, right? And we were the few and far between. Meanwhile, everybody and their grandma was selling stocks last year at stupid prices. Stupid prices, right? People like myself are picking up these shares left and right, like, okay, you're going to sell me Meta at $88? Okay, I'll take that stock. Like, what are you thinking? Are you going to sell me Tesla at $100? Sell me Shopify at $20-something? Selling Netflix at less than $200? I bought Netflix last year. Netflix. Yeah, I never thought I would ever own Netflix stock, but they sold me it for less than $200 a share. I'm like, okay, for $100-something a share, give me freaking Netflix stock. I'll take it. You give me free money, I'll take my free money, man. And this is what they did. And yet, where was everybody? They were selling. They were putting overwhelming selling pressure on those stocks day after day after day to send them new low after new low. And it's just like, it's such fascinating. Now people are running over themselves to buy these same stocks that they didn't want to touch. They didn't want to touch these stocks 6 months ago, 9 months ago, 12 months ago. No way. And now they're running over themselves after these stocks have climbed 100%, 200%. And they can't get enough of them. And man, that's the stock market for you. That's the stock market for you. It never fails, man. Never fails. Now, what do you need to do in this situation? I'll tell you exactly what you need to do, okay? Make sure you're hedging up some portfolios a little bit, okay? If you're not hedged in the market, I can tell you it's a good time to hedge a little bit, okay? It doesn't have to be a huge portion of your portfolio. Just hedge a little bit, okay? People are starting to get a little stupid again. Let's just call it that. And when people start getting a little stupid again, it pays to just put a little insurance on your portfolio, a little hedge out there, just in case the stupids crash this market. Because I can tell you, it's getting a little, based upon some of the stuff I'm starting to see, I'm like, oh boy, okay. They're starting to lose their minds a little bit again, okay. So a good time to just add a little hedges here and there that you see fit. Buy some insurance for your portfolio just in case. You don't have to sell out of your favorite stocks. Like no one wants to, I don't want to sell out of Meta and Tesla and all these great stocks I own in Amazon. But at the same time, I do recognize that people are starting, keyword is starting, to get very, very bullish. and could get into some really risky activity. And so somebody like myself recognizes that it's a good time period right now to add a little hedges on, a little insurance, just in case this market goes the other way, folks, okay? And if you don't know how to hedge, obviously there are a lot of videos out there that can teach you on the subject. I have some really good videos on the channel that can teach you about hedging. I put together some very in-depth videos recently for the private stock group in regards to hedging, definitely some high-level stuff. So, it's definitely worthwhile to kind of take a peek down that rabbit hole, okay? It can definitely be helpful, especially in time periods when you don't want to sell, but you see people getting a little crazy, and you're kind of like, let me just buy a little bit of insurance in my portfolio just in case this thing comes down, in a few months from now or a few weeks from now or, whatever. Okay, so appreciate you guys joining me as always. Thanks for being subscribed, folks. Also, July 4th, we're opening up the $10 Patreon tier for the day. If you want access to that, check out the pinned comment down there, enter in your email, and we'll send you over access when that drops, and that you get to see the moves I'm making in the market as being part of that Patreon portfolio, and getting to see those moves I make in there. So yeah, that will be pinned comment down there if you want access to that. I appreciate everybody joining me as always. Much love, and have a great day.